5 a.m. in New York City, 10 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. A tech-led rally has global stocks in the green today as Palantir boosts its guidance after what it's calling otherworldly demand. President Trump warns Iran it's its last chance to make a deal. Tehran denies any talks with Washington. And earnings continue to roll in with SpaceX's first quarterly results, plus AMD on deck. Relative stability across Asia today. Let's get to Winnie Su for details from Hong Kong. Winnie.
Yeah, good morning, Bonnie. Well, we are seeing the Japanese yen continue to lose steam after those sharp gains that were driven by the U.S.-Japan joint intervention. Now, investors are still quite skeptical in terms of the sustainability of the rally given the rate differentials, and they want to see right now further reassurance from the Bank of Japan to turn more hawkish or even an earlier than expected rate hike. That's why you are seeing Japanese yen here weakening by about 0.4%, inching closer to that 158 level against the dollar. Now, before we take a look at how that expectation is also being reflected in the bond space, we did see Japan's 10-year bond auction seeing its weakest demand since May last year, given that investors now expect the Bank of Japan to move even earlier. Now, when it comes to the equity space, the interesting part we saw today is, in fact, in South Korea's Kospi index, which was fluctuating throughout the day, but ended the day higher by 1.6%, driven by a report later in the day showing that expectations for DRAM pricing still being expected to rise further.
All right, Winnie, thank you so much for that roundup. Now we're in prime earnings season in Europe. Let's head to London for a look at markets there with Justina Lee.
Good morning, Vonnie. Now, it's a quiet but positive day here in Europe with the Stocks Europe 600 up 0.4% to another record high. And now, when it comes to U.S.-Iran talks, we're in that phase of that cycle where hopes are giving way to anxiety, and that's kind of being reflected in the bond market right now, with the 2-year UK yield up 4 basis points. Now, it's interesting because recently UK bonds have been a lot more sensitive to oil, because actually Europe bonds are not reacting as much today, and also reflecting that kind of renewed tension is also European gas futures up nearly 5%. Another worrying headline I saw the other day is that European gas inventories are very low, kind of ahead of the winter, and of course with these heat waves still going on. Now, we flip the board here, we can see some, like the backdrop for this record high in the Stocks Europe 600, which is that, you know, a lot of analysts have been upgrading earnings revisions. This is the chart for the Citigroup Europe ex-UK earnings revision, and you can see it's been on the rise lately as we've had a pretty positive earnings season so far.
All right, Justina, thank you so much. Justina Lee there in London. Here in the US, it looks like a modestly positive day, but that belies just how ebullient this market really is. It seems what's old is new again, so we actually had the Dow hit a record yesterday, and the Mag 7 were up 4.5%. Software also continuing to do well, along with the hyperscalers. So you're seeing Nasdaq 100 futures pop higher today. S&P futures actually hit a record in the session a little bit earlier on, so expect perhaps a green day if this all holds. Let's look at yields, because we did see them drop yesterday, up about a basis point or so, more now actually, 2 basis points across the curve. Yesterday, Scott Bessent, of course, calming the market a little bit, suggesting that it wasn't Treasury sales that were helping to fund the yen intervention. But we are seeing oil rise just a little bit on President Trump's threat that this might be Iran's last chance, or as he says that it is Iran's last chance. And so that's also impacting yields today. So we have Brent crude back above 86, WTI back above 82, and as Justina pointed out, troublingly, European gas futures back above 60 euros per megawatt hour. The VIX, though, is trading with a 15 handle. All right, let's get to some individual market movers now. For that, we'll go back over to London and Chloe Melly.
Good morning, Vonnie. Palantir is jumping this morning after boosting its revenue guidance. It described the demand for its data analytics tools as otherworldly, and it seems that investors are just as enthusiastic about the company's growth prospects, and we're up about 16% on the back of those earnings this morning. We are also in the green for Snap after the company reported better than expected revenue for the second quarter, and also is projecting a revenue to still grow in the current quarter. quarter, and we're up about 8% on the back of this. It's really benefited from a strong advertising sales, and so that's really driving the stock this morning. And finally, the chip maker On Semi is also in the green this morning after beating revenue and earnings expectations. And as always with those chip makers, AI data center demand is the thing that has really driven performance there. And so we are seeing a rally in the shares as well for this company, up about 8% for On Semi.
Chloe, thank you so much. Chloe Melly will be back a little later on in the hour. Also coming up this hour, more on this earnings season with Cayla Seder of State Street. Well, let's start there with earnings. Palantir rising double digits in pre-market trading. Second quarter sales described as, quote, otherworldly, far exceeding Wall Street estimates and leading Palantir to raise revenue and income forecasts for the year. Bloomberg's Neil Campling joins us now. Alex Carr, colourful as always, Neil, but where is this demand coming from? Certain countries are trying to get away from Palantir, it seems.
Yeah, it's true. I think the key reassurance is that Palantir was seen as a threat from the dual wave of AI frontier models, potentially displacing some of the software tool sets. But Palantir's tools clearly are in much demand. And so you can see that coming through in the fact that they managed to grow their revenue line for the 12th consecutive quarter of accelerating growth. 93% year on year is stunning by any metrics. So clearly, wherever they are being potentially displaced in some places, there is demand that's more than offsetting any kind of upset from that. But so a simply stunning set of results.
And if we break out commercial versus sovereign and so on, Neil, what do we find?
Yeah, so we find that obviously, as he mentioned himself, otherworldly with the demand from commercial. And I think that's where really, if you look at in terms of the expectations going ahead, then as far as you're looking to understand how you can use these tool sets, it's really commercial that's going to drive the acceleration going forward, I think. So that's clearly being taken well this morning, as you mentioned, in the pre-market. Don't forget, the stock had declined by 40% from its highs seen in November into the print.
Yeah, absolutely. It had a big sell-off. Neil, we've more and more stories coming out of China. Another company looking to go public next year, AI Squared Robotics. Of course, Alibaba's biggest AI model, it says, is on par with Anthropic. That news yesterday. And now we have Huawei's top chip scientist warning that the likes of NVIDIA are facing physical limits for what they're trying to put on their transistors, and they'll soon face an avalanche. What does he mean, and how is China doing it differently?
Yeah, so so every time we get a big tech transition on the chip side of things, we often reach sort of physical limits of what you can put on the compute onto the chip. However, what you've seen with the other AI models, and in fact with the NVIDIA ecosystem in the past, is you utilize software and other tool sets to enhance the improvements. We often get these physics limits, but we find ways around these over the course of time. Huawei and some of the Chinese players, what we don't really know is exactly how they're managing to offset some of those constraints when they haven't got access to the US IP. So in terms of the testing on the side of Alibaba and others, I think it still remains to be seen when we can test side by side these different models to see which really are leading the compute regimes right now.
And then, Neil, CXMT preparing to manufacture advanced low-power memory chips around the end of the year. What does that mean for the likes of SK Hynix and Samsung and the US memory chip makers, for that matter?
Yeah, so in traditional sort of the HBM, the high bandwidth memory types of memory, the Chinese are believed to be around 3 to 4 years behind. It would appear they're looking to sort of circumnavigate some of those challenges by offering a lower power alternative. Whether you can get these at scale remains to be seen. And I suspect that most of the US models and international models will continue to use the high performance memory chips for higher compute. But this will be an area to watch out for, especially given what we've seen in terms of supply constraints on the memory chip side.
Absolutely. Neil, as always, across everything, that is Neil Campling for us in London. In Washington, President Trump says the latest offer of talks is Iran's last chance before, quote, decapitation. Tehran denies it's been negotiating with the US. Joining us now from Dubai is Bloomberg's Amir Abu Omar. The public rhetoric at least doesn't align, Abir. What do we know about what's actually happening behind the scenes?
Good morning, Vonnie. Well, conflicting statements yet again between Iran and the United States is what we know. You just mentioned what President Trump has said, told reporters in the White House yesterday, that decapitation line. He also said that the Iranian leadership is unbelievably duplicitous, along with many other things that he said about the state of the negotiations. He still maintains that negotiations between the U.S. and Iran are ongoing. Now, from the Iranian side, we heard from the foreign ministry, Vonnie, that active discussions between Iran and the U.S. are actually not happening. Iran has maintained the line again that it will send delegates, it will send mediators to send messages on its behalf, but its top negotiators are not having any discussions with the United States. Meanwhile, other negotiations are going on. We are aware of them. We reported them last week. They're happening into the beginning of this week, and those are between Iran and Oman. And that's really to open up a pathway, if you were in the Strait of Hormuz, a middle passageway to help ships and vessels start to make their way through the Strait of Hormuz. Now, we don't know what exactly the talks entail or what exactly the mechanisms are to open up the Strait of Hormuz. But what we understand is that both are in discussions to either demine the Strait of Hormuz and help ships take this pathway that was not really open to ships throughout the course of this war. As you know, Iran has been asking ships and vessels to stick to a route that it had laid out, which is closest to its borders on the northern side of the Strait of Hormuz. Any other pathway leaves ships and vessels open to the risk of being attacked. And even into the early hours of this morning or overnight, Vonnie, ships were getting attacked in the Strait of Hormuz. Of course, this is all happening while the U.S. maintains its naval blockade on Iranian ports. And so we're watching the whole space. We're watching what negotiations is President Trump, in fact, referring to and whether those are happening or about to happen. He maintains they did happen despite the Iranian denial. Iran says no chance those are happening, that the mediators will be involved. We haven't heard from either Pakistan or Qatar. We know that President Trump said that Saudi Arabia's Mohammed bin Salman had reached out to him and said and pleaded that a return to diplomacy was the choice here, the best choice here, and that attacks are not favorable to countries in the region, that is the GCC.
All right, Abir, thank you so much. Bloomberg's Abir Abu Omar in Dubai. Now to other top stories trending on the terminal this morning. US landlord Prologis has agreed to buy the UK's largest REIT, Segro. The deal is valued at $18.8 billion. Shareholders can elect to receive a recommended share offer or a partial cash alternative. Ukraine says battle robots are taking on a bigger role in the war with Russia. Kyiv aims to produce at least 50,000 unmanned ground vehicles this year to reinforce human troops confronting Russia's military. Shares of Lufthansa fell the most since March after a warning of increased uncertainty for its full-year outlook. The airline group cited volatility in jet fuel prices and shortened booking cycles. Lufthansa Group, whose airline brands include Swiss and Brussels Airlines, joined IAG in giving growth plans for the year a miss this time. Coming up, HSBC's ramping up cost savings after beating the street's profit estimates. More on that next. This is Bloomberg.
We're growing across all our indicators, our revenue growing, our loans and deposits are growing, our fee income is growing. We generated returns of 19.5% on tangible equity. So this is a good demonstration of strong business momentum. We're also very pleased with the progress we're making on the strategy, which we're executing with precision, with discipline, and at pace.
Shares of HSBC lower by about 1.5% this morning after the lender announced fresh stock buybacks and hiked its cost-cutting target. Bloomberg's Tom Metcalf joins us now for more. Tom, El Hedary is going apace at this cost-cutting. Can he keep it up at this speed? I mean, he's exited so many businesses, 3 sales just in the past few days.
Yeah, he's certainly leaving an impact, right? And that was a very bullish sort of interview he gave us earlier. Obviously, stock market a little bit more sanguine about things, but yeah, broadly speaking, he is going ahead and execution. So before these results, we saw HSBC leave the Egyptian market on the retail side at least. And today, Al-Hedder is basically saying, look, I'm on schedule. I'm not expecting any kind of more drastic changes to the footprint of the bank as he sees it, but he's certainly one for taking sort of quick action, and that's probably why over the longer course of the shares, shareholders have really sort of embraced his strategy and overhaul.
What about the concern that wealth influxes might be just a little less forthcoming now that China is restricting capital outflows a little more? Is that still a concern for HSBC?
Yeah, the bank's saying today they haven't sort of seen too much of a sort of impact from that, but China, wealth, huge market, huge opportunity as well. So I think there is, quite a lot of downside risk there, and obviously if that situation clears up, that will be a big positive for HSBC. But right now, you're not really seeing it at least dramatically in the numbers. It doesn't seem to be holding the bank back in, maybe its core markets of even Hong Kong.
Yeah, I mean, it pretty wraps up European earnings season for the most part. Were there any cracks in HSBC's earnings or indeed in any of the previous earnings that we've seen, Tom? It doesn't seem that it was that difficult a quarter for any of the banks.
Yeah, no, we're always looking out for those signs of distress, early warning signs, right? But no, pretty much across the board, when you dig into those line items, those, expected credit losses, those provisions, there was nothing that kind of really, startled the market or was above estimates, and in many cases came slightly below estimates. I think, broadly speaking, it's a fairly kind of steady period, and I think the problem for European banks is, across the Atlantic, you have the US banks, again, broadly speaking, having a really strong quarter. So anything, the European banks did sort of paled in comparison. So that's largely why you probably see quite a muted shareholder reaction to, as you say, what's been a pretty steady, if unspectacular, quarter.
Yes, HSBC, as I say, down today, but up 33% since the beginning of the year. Tom Metcalf, thank you so much. Turning to oil now, Saudi Aramco reporting a 33% increase in profit in the last quarter thanks to higher energy prices driven by the conflict in the Middle East. For more, let's bring in Bloomberg's Anthony De Paula. Anthony, that has to be a little bit of a consolation, at least to Saudi Aramco, even as I'm sure it's very concerned about infrastructure and the future trajectory of the war.
Yeah, good morning, Vani. Yeah, that's correct. I think it's more than a consolation for Aramco because these were pretty positive results, 33% up on the adjusted net income for the quarter versus last year. So that's a pretty hefty result. They reported more profit than ExxonMobil and Chevron combined. And we saw those companies last week reporting based on the higher oil prices. That goes for Saudi Aramco, the higher oil prices. Plus, they've been able to maintain a large portion of their exports by using that cross-country pipeline that allows them to export from the Red Sea as opposed to the Persian Gulf, where obviously the Strait of Hormuz remains blocked. Now they do have some risks going forward around the Bab el-Mandeb, which is at the southern end of the Red Sea, some threats there from the Houthis in Yemen. So that's a risk. But Aramco CEO Amin Nasser was telling us on several calls today that so far there's been no impact on the exports. Aramco is still exporting around 5 million barrels a day as they maximize the shipments out of the Red Sea. They're able to go north through the Suez Canal that takes their oil into the Mediterranean Sea. If they have to go to Asia via that route, that adds about 20 to 25 days more sailing time. So that is going to be some delay and some impact in terms of getting barrels to market. But they are still going ahead, and they're still confident that they'll be able to continue those exports, as well as lots of exports of refined products as those refineries on the Red Sea continue to pump out diesel and jet fuel. And that's a big area of the market because those margins are really high, and that's been benefiting a lot of the integrated oil companies that we've seen as they reported earnings last week, this week, and going forward, Vani.
Let me ask you about BP, Anthony, because we also saw a very nice beat from BP, and in fact, they're actually within sight of meeting their debt target, right? Their repayments target. So what kind of shape is BP in now?
Yeah, also a good net income number from BP, one of the highest in years. Again, that's high oil prices that have benefited all the producers across the oil spectrum. Plus, again, those products, BP is also a big refiner, so those products that are giving good margins. And BP also has a huge trading arm. And so as those traders are able to buy and sell crude oil and products across the globe, as there's a lot of volatility, as there's a lot of shortage, that's exactly the kind of circumstances in which traders benefit and are able to bring up those profits. So BP has been really benefiting from those issues and, as you said, working towards paying down that debt, Vonnie.
All right, Anthony, thank you so much. That's Anthony De Paula there, all over the oil market in Dubai. This is Bloomberg. Time now for your front page news. First up, the BBC reporting EU interior ministers will host emergency talks by video conference to discuss border security after the influx of migrants from Morocco into the Spanish exclave of Ceuta. Spain estimates now about 69,500 migrants have returned to Morocco, higher than the 50,000 initial estimate. Next up, the Financial Times reporting Russia has been quietly increasing its shadow fleet of gas-carrying ships ahead of an EU ban on its LNG cargoes coming into force next year. The now 25-strong fleet will allow Moscow keep shipping gas when restrictions tighten. And the Wall Street Journal reporting Taiwan is opening up about long-concealed U.S. military training in a move seen as an attempt to combat skepticism about the U.S. position towards Taiwan. It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning, I'm Vonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. A tech-led rally as global stocks in the green as Palantir boosts its guidance after what it's calling otherworldly demand. President Trump warns Iran it's its last chance to make a deal. Tehran denies any talks with Washington. And earnings continue to roll in. SpaceX's first quarterly results plus AMD on deck. So let's take a look at those futures then. Well, Russell 2000 futures have just dipped into negative territory, but S&P futures actually hit a record earlier in the session, and Nasdaq 100 futures pointing to a healthy gain at the open. We had the Mag 7 index up 4.5% yesterday, would you believe? Hyperscalers outperforming chip stocks, software continuing to rally. And that's why you have the Nasdaq 100 higher, the VIX trading below 16. In the background, of course, markets waiting on Friday's jobs report, and there are many China AI stories percolating as well. Let's look at yields. They fell yesterday. They're back up about 2.5 basis points across the board. That 30-year yield still pretty elevated, and the 10-year yield firmly above 4.70 now. This even as Scott Bessent tried to calm the market somewhat by saying the yen intervention wasn't being funded by Treasury sales. We get the Treasury quarterly refunding statement, of course, tomorrow. And then let's look at oil, because this is probably what's impacting yields most just in the early going. Brent crude back up a couple of dollars to almost 86. WTI at 82 and change after the president warned Iran this is its last chance. European gas futures as well up 4.5%. Let's get to some individual movers now with Chloe Melee in London.
Good morning, Vonnie. Palantir shares are jumping this morning. We're up about 16% in pre-market trading after the company boosted its revenue guidance. It described demand for its tools as otherworldly, and analysts have also mentioned that the company really benefits from a competitive advantage and are very enthusiastic about its growth prospects. So a very positive move there. We are also in the green and quite high in the green for Snap after it reported better than expected revenue for the second quarter, and that was really driven by its advertising revenue. It sets up the company quite well ahead of the release of its augmented reality glasses due in September. We're up about 8%. And finally, Powell Industries is slumping this morning in pre-market trading after its third quarter EPS fell short of analyst expectations. The momentum in orders was actually quite good, but it seems that the earnings miss really overshadowed that. And so we're down more than 14% on the back of this morning.
All right, Chloe, thank you so much for that roundup. That is Chloe Melee there in London. Joining us now is Cayla Seder, macro multi-asset strategist at State Street. Cayla, we haven't spoken to you since the last FOMC meeting, so I'm curious as to your thoughts. We're getting more and more warnings by the day now. Bank of America, Brandywine. We also had Wellington coming out and saying that the risk of a bond rout is very much present. Now that we don't have any sort of guidance for inflation fighting and the response mechanism from the Fed, how do you see it? Are you concerned that we might see particularly longer end yields just spiral?
Yeah, good morning, and thanks for having me, Vonnie. I think there's a lot to discuss and unwrap here in the Treasury market, especially at the long end. I think what's really unique this time around versus other times when we've been concerned about the long end is that we see both rising break-evens and rising real rates. And I think for the market, when we look at both of those components, it's important to consider direction versus level. And when we look at real yields, I think the level really matters because historically, when we see real yields within the 10-year maturity get around 2.5%, that's when we start to see more equity volatility, equity sell-off. Now, when it comes to break-evens, which really reflect the market's perception of where inflation is going and is very important in terms of Fed credibility, I think the direction there really matters as opposed to the outright level. And that's one thing that was really unique over the past week versus Chairman Warsh's first meeting. At his first meeting, we saw break-evens very stable. Now we've started to see them rise. And that's a signal that investors are getting nervous that inflation is going to be elevated for even longer than they expected before.
Cayla, if we get fewer news conferences, maybe even fewer monetary policy setting meetings, and the market is flying just a little bit more blind, at least in terms of what FOMC members are thinking, how would you go about reading the macro environment? How would it change how you go about doing that?
That is tricky, and I think it gets a little more complicated here than it used to be. And that's why we've started to see more headlines around the likelihood of rising volatility under the Warsh Fed. I think ultimately, traditionally, as you see stronger employment data, as you see signs of persistent inflation, that should mean higher yields. One takeaway is that I would say this ultimately should lead to higher term premiums, which is why we still see room for the long end to continue to rise here and would be hesitant to fade some of the upside move in yields. The second component that is different today versus 2 weeks ago, 3 weeks ago, is the dollar. Because traditionally, again, stronger data should mean a stronger dollar. But if you have a bit more caution as to whether or not the Fed will ultimately, hike rates at the pace we thought they would in response to stronger data, you would have expected the dollar to be stronger. Now, I think it causes a little bit more uncertainty that actually puts pressure on the dollar and could cause the dollar to weaken even further here.
You mentioned that at some point it will impact equities. We're not quite seeing that yet. All the indices are very close to their highs, right? So at what level do yields impact equities?
Yeah, I think it's important to look at the real yield component. So right now, 10-year real yields are a little above 240, around that level. Historically, we've seen a pullback in equity positioning when real yields get above that 250 level. So that's an important place to watch. With that said, this time could be different. And this time could be different because of equity allocation right now. So in our data set that specifically looks more at longer term institutional real money investors, they are very concentrated in tech. And what that means is they're very concentrated in high quality, low interest rate risk parts of the market. And because of that high quality exposure, we could see a pullback, but it's really hard to not see reallocation back into the same part of the market. And so I think ultimately what this means is a lot more chop as opposed to a full out sell-off if yields continue to rise.
Yeah. Cayla, I'm just showing viewers a chart here, it appears, and this surprised me, that US equities actually have had a valuation reset, and that if you look ex-US at the MSCI World Index, the forward PE ratio of the US is at its lowest in 6 years, which would argue for, potentially this bull market continuing, right? Do you see it that way?
I think this is reflecting that rise and fall, a little bit more chop. Part of what drove that earlier this year was starting to see selling of semis. And what we've recently seen is we've started to see more appetite for semis. Additionally, one thing that has shifted recently after the start of the third quarter is we also started to see more demand for software after not seeing a lot of demand for software before. And so I think what this means is that there's still room for increased allocation within parts of tech where we saw some pain at the beginning of this year, at the end of Q2, as we saw some rebalancing. And so ultimately, I think, we continue to see demand for tech. Another place where we have seen a little bit more demand is in financials, especially large cap financials. They've had a very strong earnings season. And then on the flip side of things, we've seen a little bit more rebalancing when it comes to healthcare. So it's not quite a positive story there, but we have seen a bit more demand, mostly just because positions are so underweight there. You do see a little bit of buying just to offset some of those underweight positions.
Cayla, are you seeing any kind of an increase in hedging, whether it be single stock hedging or, other types of hedges?
Yeah, so one thing we're able to do is look at FX hedging. And what we've seen this year that's very different than last year is when we look at hedging of currency exposure, and as we've seen more demand for US equities globally from foreign investors, what we've seen is real money investors adjust their hedges a little bit. So on the domestic side of things, last year we saw US investors really cut their FX hedging because they expected other currencies outside of the US to appreciate. That has since switched. We see a bit more signs of stability. And so actually that would be dollar positive. With that said, that is one part of the equation. When we look at actual positioning right now, positions are very underweight, and they have been underweight since April 2025, around that Liberation Day. Also during a period where we started to see term premiums begin to rise. And so it looks like there is still somewhat of a structural challenge to dollar strength here.
All right, Cayla, thank you so much. Always a pleasure to speak with you. Cayla Seder of State Street. Now to other top stories trending on the terminal this morning. HSBC is considering boosting its bonus pool if strong performance continues. The bank's second quarter earnings beat estimates, posting gains in banking and wealth revenue. It announced a fresh stock buyback and raised its cost-cutting target. A group of 25 US states have filed a lawsuit challenging President Trump's new global tariffs that went into effect last month. The suits accuse President Trump and US officials of unlawfully using Section 301 of the 1974 Trade Act. The states include New York, California, and Illinois. Disruptions on the River Rhine are poised to intensify after the river fell to its lowest level in nearly 150 years. Barge clearance for one of the choke points dropped to as low as 21 centimetres, or about 8 inches overnight. The waterway is a crucial route for transporting coal, fuel and industrial commodities across Europe. Coming up, President Trump says Iran is facing its last chance to make a deal. More in his warning next. This is Bloomberg.
Going on right now. It's an amazing thing. We have a little problem with Iran because we have many talks, we're straight about it, but they deny, but they're not denying it now. I think we're going to maybe get something, but I want to give them every last chance before decapitation.
President Trump warning Iran to make a deal as Iran denies having any negotiations with the United States currently. Let's head over to Washington with Rachel Schilke of Bloomberg Government. So the president saying this is Iran's last chance. What is the plan for quote unquote decapitation, Rachel? Do we know?
I don't think that we really know. I think that what we're seeing is another example of President Trump trying to revert back into diplomatic negotiations. Obviously, we've seen this before. There's been conversations about certain talks. However, the U.S. destroyed a lot of Iran's leadership. So there's a lot of uncertainty as to whether who he is talking about, who these negotiations are occurring with. But right now, it's something that he wants to get away from. Obviously, it's a big issue for the midterms coming up this fall. Republicans are having a lot of questions that they are being asked about Iran and the way that this is going on. And I think that the president is noticing this, and he's trying to move away from the warfare, which has kind of torn up the country.
And speaking of the war, the president absolutely excoriated Exxon and Chevron and big oil, basically, for profits because of the war he launched. Explain to us how this happened.
Yeah, well, he said yesterday that he thinks that the companies are making too much money. They made about $29 billion combined in the second quarter, which is 3 times the same period a year ago. And a lot of these high oil prices come from the Strait of Hormuz crisis. That was kind of the main driver. And that's been one of the biggest conversations on Capitol Hill in the White House about this strait and how it can be used. And that has been the center of these negotiations. And so as President Trump is saying that he wants to avoid decapitation and he wants to make sure that the U.S. and Iran can come to some sort of agreement, this strait is going to play a major factor. And as a lot of people have discussed, that gas prices and just energy prices in general are going to be a huge factor in the upcoming midterms. Its affordability is a big issue, and we've seen Congress had to take some action in that regard. But with the war still going on, it's kind of defeating some of the purposes that Congress is trying to navigate before their elections.
And that's essentially sort of what caused these comments in the first place, right? The president wants some of these companies to give back somehow to the American public, cutting retail gasoline prices or what have you. It's an attempt to, I guess, appeal to voters before the midterms and also maybe get his approval rating up because it's not very high at the moment.
Yeah, absolutely. I think that that's something that Republicans are really going to struggle with in this midterm election. And just in general, affordability is among the top issues for voters. So that is something that the president is going to have to explain to voters. He's not on the ballot, obviously, but his word carries a lot of weight. We've seen that with primary elections. We've seen that just with these Oval Office talks about the things that he says and the things that he's able to convey just through short remarks to reporters about these negotiations. People are kind of confused about that. They don't know what these negotiations are, but a lot of people will be clinging to hope that diplomacy can take care of the situation and there won't be as much warfare anymore, because warfare is also not polling well with the public. And for Republicans who are running in these midterms, especially vulnerable ones, there needs to be some sort of answer soon, and there's not much that Congress can do except vote on war powers resolutions, but those are not as binding as I think that people are hoping. So it's kind of a waiting game right now.
Rachel, thank you so much for all the context. That is Rachel Schilke of Bloomberg Government. Staying in Washington, Bloomberg learning that leaders from AI developers, including OpenAI, Anthropic and Google, are headed to the White House today for a meeting with President Trump. Bloomberg's Neil Campling is back with us for more. Neil, what could they possibly have to speak about? What will the message from President Trump to these companies be in particular?
So we've had already some sort of voluntary guardrails around the security elements for the AI frontier models. So I think the discussions will be around what safeguards are in place, because we've had recent examples of where these models have escaped some of the existing controls. And it's really about balancing act between making sure the security protocols are in place, but they're not hampering the efforts for the US AI models to lead in terms of technology developments. Other questions around here come from outside of the US. Anthropic have previously mentioned that the Alibaba models had hacked into the Anthropic model nearly 29 million times. So you need to effectively have the safeguards to prevent some of the bad actors wherever they may be based in the world, but then also having the right protocols in place. One thing that will be keenly watched is as to whether there will be strict protocols officially released, or whether there'll be new tool sets to enable the frontier models to work in the confines of regulation. Some suggesting that maybe we may be seeing a similar framework that exists in the financial services industry.
All right, Neil, we'll look forward to that meeting and what emanates. Thank you so much. That is Bloomberg's Neil Campling for us. One earnings report we're keeping an eye on, SpaceX. The company is set to report its first ever quarterly results after the market closed. Joining us now is Bloomberg's Danny Lee. What will investors and analysts be concentrating on today, Danny?
Yeah, Vonnie, good morning. So, we are seeing this first earnings period, an exciting one perhaps, but all really overshadowed, first of all, by the share price of SpaceX, which right now is 15% underwater relative to its IPO price and about 50% down from its peak. So wiping out $1 trillion of valuation in the process. But when you look at the real focus of investors, for example, Elon Musk, he will probably be asked questions about whether SpaceX is going to be looking to merge with Tesla, for example. Will he be drawn into questions around that? There's been a subject of constant speculation, shall we say. And on top of that, the AI parts of SpaceX. We saw recently, soon after the IPO, the fact that SpaceX did a $60 billion all-share transaction to buy Cursor, an AI coding startup. Now that, once the transaction closes, will give it leverage to catch up to the likes of Anthropic and OpenAI. Investors will be trying to gauge how much more, what more can SpaceX do in this area of AI to kind of really accelerate its development. Ultimately, investors will want to hear how well these businesses are performing, such as Starlink, such as the rocket business, and of course around AI. So yeah, there's a lot of questions, and of course since the IPO, the fact that SpaceX has been a loss-making business and is not looking to be any fundamental change there, clearly investors will be looking at the capex spend for this year.
Exactly, and you have to imagine that lockups expiring are going to drive the narrative as well. When do they start, Danny?
Yeah, so there's going to be about over a billion shares that will be released over the next weeks, and so in terms of this lockup expiry, that could cause more volatility to the share price. We've already seen a lot of pressure put on the share price in recent times, so what effect that might have. Clearly, a lot of the comments coming out of what Elon Musk has to say will be closely watched in all of this. Ultimately, though, when you look at what could drive the share price, we already got analysts who still have targets they're sticking to of around $800 a share or more. But when you look at this idea of this SpaceX and Tesla merger idea, there was a report in the Journal last week suggesting that Tesla's China business could be separated or hived off, and that could open the door to a SpaceX and Tesla merger. Clearly, Elon Musk has responded to this saying it's absolutely false. But we've been here before where Elon Musk has denied things. Later on, it has turned out to be true. So there's going to be a lot to watch and wait for, not just in the next coming days, but also in the coming months.
Yeah, absolutely. And as you say, shares down about 15% from their IPO price. Bloomberg Asia Aviation and Transport reporter Danny Lee, thank you. Coming up, more earnings on deck in your day ahead. This is Bloomberg. Now a look at what's ahead today. First up, we get JOLTS job data coming in at 10 a.m. Eastern, and factory and durable goods orders coming out at that time as well. Earnings on deck with Pfizer, Caterpillar, Spotify, Kimberly-Clark. They're all just before the bell. And then after the bell, we have AMD and SpaceX. Let's take a look at some movers before the bell. Some strong earnings yesterday from Palantir, for example, up 17% in pre-market trading. Otherworldly demand, according to Alex Karp. Snap also up more than 6%. It had a 19% increase in revenue in the quarter. Its augmented reality glasses, though, don't debut until next quarter, so we'll see how it performs. And on Semiconductor with a nice beat as well, up 7%. Let's take a look at your macro picture going into your Tuesday session. Nasdaq futures higher, the 10-year yield above 470, and oil just higher as well.